let's take a look at a common operational decision in our G&G landscape setting. Currently, G&G purchases 300 orchids, a type of flower, from a local supplier each month. The supplier has recently raised the price to $10 per orchid. Gina, the manager of the floral department, has asked for an estimate of the cost of producing orchids in-house. So essentially, Gina's been buying from an outside supplier, and now she wants to decide whether or not she should produce the orchids herself or make the product in-house. So here's some information that Gina has. 2 additional employees would have to be hired to produce the orchids in-house, but existing greenhouses, soil, and potting supplies could be used to produce the orchids. No other changes to the business would be necessary to start producing the orchids themselves. In terms of predicted costs, the seedlings and fertilizer would be $5 per unit. The planting, watering, and supervision labor would be $3 per unit, and the production overhead costs would be $2 per unit. The organization would also allocate administrative overhead costs to the orchids at $1 per unit. This 5 plus 3 plus 2 plus 1 equals $11 total per orchid. Other information available is that half of the production overhead on a per unit basis is based on the orchid line's share of fixed costs for land, greenhouses, and production supervisor salaries. And administrative overhead is the orchid line's share of administrative support costs, such as finance, accounting, and corporate support. So now let's analyze this decision a little bit more closely. Again, this is a make or buy decision. So we're focused on costs here for now. One decision or one path would be to continue to buy the orchids from the external supplier. And we know that that comes out to be $10 per orchid. The other option is to produce the orchids ourselves, generically referred to as the make option. And we were told that our costs were going to be $5 for the materials, $3 for the labor, $2 for overhead that had to do with manufacturing or production, and $1 that was overhead that had to do with administrative support. Per the report that was provided initially, the costs of making these orchids is $11 per unit. And on the surface, it looks as though it costs us too much or more than what we're currently paying to buy the orchids, and so the decision would be to continue to buy the orchids from the external supplier, even though the price has recently gone up. But let's dig a little bit deeper into this situation. First of all, what about the revenues associated with these transactions? We're not just buying the orchids for ourselves, we're turning around and selling them to our customers. Well, let's assume that no matter where we get the orchids, whether we produce them in-house or we buy them from the external supplier, we charge our customers the same. This is an example of a situation where the revenues are irrelevant. They're the same regardless of whether we make or buy the orchids. So therefore, we would exclude from our consideration any consideration of revenues. Those don't differ between our two decisions. Now let's apply that concept by ignoring the revenues because they're irrelevant to some of these costs. So looking at the buying of orchids from the external supplier, if we choose to buy the orchids, we'll pay $10. If we choose not to buy the orchids, we won't pay the $10. So the $10 differs between those two alternatives, to buy or not.